The Radical. Fundamental principles of freedom, rational self-interest, and individual rights. This is the Yaron Brooks Show.
All right, everybody, welcome to Yaron Brooks Show on Wednesday, March 15th already? March 15th, wow. We're already in the middle of March. All right, we've got a bunch of stuff to talk about today. I also want to let you know that a little change to the schedule. There will be a show tonight at 7 p.m. East Coast time. 7 p.m. East Coast time will be the show tonight instead of tomorrow. I've got some people coming in, and we've got dinner reservations, so tonight it'll be 7 p.m. East Coast time. 7 p.m., not 8 p.m., 7 p.m. East Coast time. Yesterday was 8. Today is 7. 7 p.m. East Coast time will continue to be, it was in the past, continue to be the time for most evening shows. Let's see, the topic tonight, I'm still debating this, but I have a sponsorship. Somebody has sponsored a show for me to do a whole show on Israel. So my plan tonight is to do a show called something like Israel, Is It a Legitimate State? And we could take on all the different objections, questions, issues with regard to Israel. What should its immigration policy be? Is it okay for Israel to be a, quote, ethno-state? Is there equality before the law? And to what extent is that, does that contribute to legitimacy? Not is it a real state, is it a legitimate state? And then we can also talk about the Israeli-Palestinian conflict, how Israel is dealing with it. We can talk about the current judicial reforms that are going on in Israel, and whether they are legitimate or not, and all the demonstrations that are going on there and everything else. So everything to do with Israel is on the table today. So we'll do the whole show on that. Feel free to come up with any questions you want, any concerns. Of course, you can ask questions about anything, as always. But I know that many of you, primarily those of you who don't like me, have a lot of questions about Israel and a lot of concerns and a lot of challenges. I did get, this question did come from a couple of Israelis. So, these are, I think, very legitimate questions, or very interesting questions. And it reminds me a little bit about the banking situation. What do you do in kind of the mixed world in which we have? So we're going to cover it A to Z, hopefully, and you guys, I encourage you guys to jump in with questions, comments, suggestions. So tonight, 7 p.m., everything you ever wanted to know about Israel and were afraid to ask, or embarrassed to ask, or just didn't have anybody to ask, or whatever. All right, let's jump in. So I'm hoping every day, like every morning, I'm hoping, okay, today we don't talk about banks. And yet every day we have to talk about banks, because this is right now the most important economic story in the U.S. right now, and it just turned global, or at least European as well. So we have to talk about banks. Generally, we have to talk about the economy and the Fed and inflation, because this is the most important story in the news right now. What will the Fed do? What's going to be the impact on the economy, and what's going to happen to the banking sector? Where is it heading? What are the range of outcomes that are possible here? It's not it's not an easy situation. I think we also need to talk about what are the consequences of the bailout of depositors at Silicon Valley Bank. I mean, I wasn't surprised at all by the bailout, but what are the consequences? Because they're definitely consequences. They always are. What are the consequences of renewed calls for more regulation? So there's a lot to unpackage here. We're not going to do it all because it's a news roundup show. So we have to limit the scope. But we'll be talking about this and I'll probably do a longer show maybe next week, trying to summarize everything and trying to give you a perspective in the future. But here are the highlights from a news perspective. CPI inflation came out this week as a little above expectation. So those people who were hoping that inflation was dead, was finished, it was crushed, the Fed didn't have to do anything, we're disappointed because inflation month over month was higher than expectation, a little higher than expectation. Inflation rate year over year dropped to 6 from 6.4 something, but it still was high at a monthly basis, and 6 is still high, certainly higher than what the Fed has claimed that it wants it to be at. So inflation is still significant. Inflation is still in the mind of economists and in the mind of the Fed, and is an important force. On the other hand, I didn't say there was a first hand, but anyway, on the other hand, PPI inflation came in today, PPI numbers. PPI is producer price inflation. That is the prices that producers pay. So further up in the supply chain, what are people paying? And of course, this usually anticipates consumer prices, because if producer prices are going up a lot, then those prices ultimately are passed on to consumers. And if they're going down, those prices ultimately come down for consumers. The producer price index today came down below expectations. So if you want, you can interpret that as in the future, CPI is going to come down, inflation might be in better shape than we think. But this is the problem with central planning. This is the problem with trying to manipulate people's behavior, trying to set central planning goals for the entire economy, trying to set prices for the entire economy, the price of money, interest rates. This is the problem. Now, the problem manifests itself in many different ways, but the problem is, how do you do it? What number counts and what doesn't? What economic theory is right about what will bring down inflation and what isn't? I mean, there are competing views, legitimately competing views about what will bring down inflation. Do you literally have to drive short-term interest rates, the rates at which banks borrow and lend from each other, all the way up above the inflation rate in order to get inflation down? Or are there other factors that drive inflation down and you don't have to increase interest rates as much? Do you literally have to drive the economy into recession in order to get rid of inflation? Or is that unnecessary? Are there other tools that we have in order to eliminate inflation? And you can get free market economists who disagree about this. You can get legitimate, real people who don't quite agree, because, and part of the issue is, I don't think anybody really fully knows, because the system is so complex. The system depends on so many different decisions that people are making. There's the banking crisis right now. And there is a banking crisis right now. Just look at bank stocks. Is the banking crisis right now deflationary? Is it neutral? Should it affect the decision at the Fed to raise or lower interest rates? I mean, add to that, the fact that no matter what the Fed is contemplating doing, the market, in a sense, has already spoken, in a sense that basically 10 years, 2-year, 5-year bonds, the interest rates on those have plummeted. The fastest decline of interest rates since the 1980s. They've just plummeted as a response to what's happening with banks. Should that affect what the Fed does? Shouldn't it affect what the Fed does? How do you know? How do you decide? Who gets to decide? The Fed was going to, by all expectations, raise interest rates by 50 basis points next week. But given the bank crisis, some people think it should keep interest rates flat. It might just compromise and raise interest rates just 25 basis points instead of 15, instead of 0. Is that compromise? Does it make sense? Is there any economic theory, logic behind it? Nobody knows. They'll tell a story. Everybody will tell a story. They'll pull out equations, they'll run, but nobody knows. They simply do not know. And they pretend to know. They pretend to act as if they know. And what we live through are the consequences of that, of central planners not having a clue or having some clue, but sometimes having some clue is worse than not having any clue, because then you have the confidence to act, and acting in ways that affect all of our lives. So we're going to see a recession, I think. It might be very deep. It might be worse than deep. You know, a lot of things, you know, are suggestive, given the declining interest rates, that the market certainly thinks things are going to hell very, very quickly. Yeah, we know exactly why SVB failed. There's no question about why SVB failed. We know exactly why. The questions now have to do with the fact that SVB was bailed out. What are the consequences of that? And they might not be short-term, but they might be long-term. Was there an alternative? Given the situation in the banking system, could SVB not have been bailed out? I mean, I've seen a lot on Twitter saying, look, there were rules. Rule says $250,000 limit. The Fed will bail you out, but anything above that, you gotta pay the piper. You gotta suffer the consequences. Absolutely, there were rules. But since when are rules actually followed? Since when? Were they followed during the S&L crisis? No. FDIC insurance was raised $100,000 when it was convenient, and then some banks were closed, some banks were not, some were closed early, some banks were closed late. There were no clear-cut rules to follow. The FDIC insurance fund went bankrupt. Did it just fold? No, it was recapitalized with taxpayer money, by the way. In the great financial crisis, were the rules followed? When Goldman Sachs overnight went from being an investment bank to getting a commercial bank charter, was that following the rules? Really? There are no rules when it comes to politicians having the power. When Paulson sat down with Bernanke and decided that Bear Stearns and Merrill Lynch could fold and go under, but you know, but they would be taken over. Lehman would just have to go bankrupt, and to hell with assets. We'd see what happened there. But AIG, no. AIG were to bail out. Were the rules being followed? Are the rules ever followed under statism? Yeah, the rules of the person making the rules. But there's no consistency in rules here. And this is what I said when SVB went under. I said, you know, it's a mixed economy. We don't have markets here. We don't have capitalism here. There are no market rules. The regulators, the politicians are going to make it up as they go along. And of course they'll bail out SVB. Not primarily because they worry about Silicon Valley, although they worry about Silicon Valley, but they also bailed out Signature Bank, and that wasn't a Silicon Valley bank. Not because of that. They'll bail them out because they worry about all the other banks that there will be a run on. They'll worry about the contagion effect. Is that a legitimate thing for them to do? Illegitimate for them to do? What does it mean when all the rules are arbitrary and they can be completely reneged on whenever the government wants? They can form new vehicles to fund banks. They can create an extra window at the Fed. The Fed can do this. The Fed can do that. There's no end to it. We basically have an economic system that is run by autocrats, that is run by a Federal Reserve and a board at the Federal Reserve, you know, with what I would consider a lot of pseudo-economics thrown in, and they do what they want to do. Nothing about the great financial crisis followed the rules. You remember Congress gave the Treasury Department, a Republican Congress, by the way, Republicans, gave a Republican Treasury Secretary, Hank Paulson, $700 billion to do what he wanted with. It was called TARP, Troubled Assets, something, right? Troubled assets. But TARP was never used to buy troubled assets, which was what it was intended for. It's supposed to be a fund that the government would use to buy troubled assets, that is, assets that were in trouble, from banks. It would just buy the bad stuff, all the stuff that was troubled. Troubled assets relief program, thank you. Did they buy any troubled assets? No. They bailed out banks. They just sent checks to the banks. And they forced the banks to take the checks. Unbelievable. Banks couldn't say, basically, the big banks couldn't say no. Everybody got a check. A bailout from the government. And by the way, bank stocks only plummeted, only really took a big hit 2 weeks after TARP, once investors realized what the hell the government was doing. Then they panicked. They didn't panic because of Goldman as much. They didn't panic because of the legislation. They panicked once they realized what the government was going to do with these checks. So, I mean, look, the system is fundamentally corrupt. The system is fundamentally corrupt. There is no saving the system. You can tinker with it here, you can tinker with it there. If you give everybody deposit insurance, then you have to increase regulation because deposit insurance creates moral hazard. Moral hazard means bankers have an increased incentive to take on more and more risk because depositors will still send the money no matter how much risk they take. So the only way to control that risk is to send regulators in who can control that risk. But regulators are generally not that smart and pretty ignorant. So bankers can always find ways around them to take the risk anyway. The whole system that relies on government deposit insurance, that relies on central planning, that relies on a Federal Reserve, that relies on 7 different regulatory agencies to follow these banks. This is a system that is bound to implode. This is a system that is not sustainable. And every few years, guess what happens? It implodes. We need a different system. There's no tinkering. There's no little changes. There's no Dodd-Frank. There's no deregulating a little bit the Republicans like to do. Let's just get rid of, loosen up these things just over here. None of that is going to help. None of that makes one iota of a difference. You either completely reconsider the banking system, and that's what needs to be done, or you let it down. And with regard to inflation and the Fed, look, as long as we have a central planner, they have to act. But their actions are never right because there are no market signals. There are no real market signals. All the market signals are already tainted by expectations about what the central planner will do. So the bottom line is we're screwed. We're screwed. I mean, we're screwed because I think we're heading into a recession. I think things are going to get bad, and I haven't even got to Credit Suisse. So Credit Suisse today reported that it looks like we weren't keeping records quite as well as we thought we were. We'll fix it. We'll get on top of it. And this was because of certain requests from U.S. regulators. I mean, Credit Suisse is heavily regulated by European authorities. It is a regulated bank. The regulators are there all the time. And they still can't get it right. Maybe because the regulations themselves are screwed up. But here's Credit Suisse, it's Credit Suisse. It's a Swiss bank. It's been in trouble for a year now, and it has a history of trouble. Banks in Europe are getting clobbered today. Stock markets in Europe are getting clobbered today. Banks in the U.S. are getting clobbered today. Stock market in the U.S. is getting clobbered today. This has this feel of international contagion I've told you over and over again that shoes are going to drop, dominoes are going to drop, whatever metaphor you want to use. This shift from a 0% interest rate environment to the Fed raising interest rates because of inflation is costly. They're going to be casualties, and we're going to see those casualties. And it's happening right now. It surprises me that it's happening first in the banking system. I didn't expect that. But it doesn't surprise me that it's happening. it doesn't surprise me that the consequence of the post-Great Financial Crisis, George Bush trying to save capitalism from itself, and a bill named after Dodd and Frank, two of the most corrupt, ignorant, and horrible American politicians ever, that these things have long-term, dramatic, significant consequences. And then, of course, a Fed that did QE1, QE2, QE3, and everybody says, wow, we're doing all the QEs, and there's no consequence. Oh, you guys were wrong. There are no consequences. So let's just ramp up the QE. And when COVID happened, whoa, what an opportunity to do a QE on steroids. Steroids. And now we have inflation, and now the Fed is raising interest rates, and now a lot of chickens coming home to roost. There's another metaphor for you, right? We are paying the consequence, and the consequence are not going to be pretty. The consequence are going to be ugly. Frank, it's not you. It's Bonnie Frank and Chris Dodd, one in the Senate, one in the House, two Democrats who hate banks, who hate capitalism, and they're the ones who got Dodd-Frank passed. And remember, they could have not passed Dodd-Frank without significant Republican support, right? Because you need 60 votes in the Senate to get a bill like that passed. So Republicans share the blame in these horrific kind of bills. And of course, nobody's going to blame Dodd-Frank. Nobody's going to blame regulation. The conclusion of what's happening right now is going to be, we need more regulation. And by the way, I'm sure Donald Trump is probably tweeting right now, Silicon Valley Bank would have never gone bankrupt if not for me. I would have negotiated a deal. I would have made no bankruptcy at SVB if I were president. I'm sure he would be saying that right now. All right, is saying that right now. All right, let's see. Enough on inflation, economy, banks. That was super depressing. So here's another depressing topic, but again, I don't have time to get into it. So this will have to be a longer show at some point, but there was a good article today in The Atlantic, much of which I don't agree with, but it was, in terms of the solutions, but it was a good article, nevertheless, a really interesting article. And this is the context I want you to hold. The world post-World War II, and this is something that, what's his name? The demographics and geography guy always talks about. You guys will remind me of his name in a minute, the demographic geography guy. Post-World War II, basically what happened was that the United States military, but primarily the United States Navy, basically guaranteed Zihan, thank you, Zihan, basically guaranteed the world shipping lanes and made globalization possible. It made trade possible. It made, massive improvements in human life, massive improvements in wealth and in wealth creation possible, massive declines in poverty around the world, massive increases in the standard of living of Americans, and America is the great beneficiary of globalization as much as anybody in the world. And all of that was made possible by the ability of the cost of shipping to be driven down to almost zero at some point because of the invention of the container, because of the number of ships that were built, and because primarily the shipping lanes were basically protected. Pirates were gone, state actors stopping the shipping were gone. Even though there was a Soviet bloc, the Soviets did not want to challenge the United States in the high seas. They had no ability or willingness to stop global trade from happening. I mean, they might have wanted to, but they had no ability. And they certainly did not want to confront the United States in doing it. And as a consequence of, this kind of protection of the sea lanes, which is what Ayn Rand complimented the British in the 19th century on. She called it gunboat diplomacy, but more importantly, she talked about the point of foreign policy, the primary purpose of foreign policy and of the military, beyond protection from invasion and protection from terrorists, was to secure free trade, secure the movement of goods from place to place. And the United States did that, and did that very effectively in the post-World War II era. But the United States became complacent. It became complacent after the fall of the Berlin Wall and the fall of the Soviet Union, invested a lot less in its Navy, shut down a lot of its old Navy capabilities. It then became complacent because there were significant voices within the United States, really starting with the Trump administration, against trade. The globalization was somehow bad, picking up really on a point the left had been making for a long time. We were losing jobs, we were losing competitive edge, trade deficits were bad, and we needed to stop all this trade. And as a consequence, the United States is being retreating from its position of protecting the sea lanes of the world. Fewer ships, fewer submarines, and at the same time what we've seen is that China not only is now aggressively taken hold of areas in the South China Sea and the East China Sea, that whole area, including international waters, building artificial islands, but clearly laying a claim to the busiest shipping lane in the world and trying to take it out of American influence. And whatever you think about China, that is not good. That is not good. It is not good for American security. It is not good for trade. And part of this is a consequence of the fact that the United States is investing less and less in its Navy. It's investing less and less in, while busy in wars in Iraq and wars in Afghanistan and having troops all over Europe when Europe can defend itself. And having troops, really, ground troops in 120 different countries. And at the same time neglecting its Navy. The United States is unique in that it has both, Atlantic and Pacific coast. And it has the ability, it had an amazing Navy that could project power all across the globe. It is slowly losing its dominance. The United States has no ability anymore, for example, to compete with the Russians. In the Arctic region, we have no ability to take ships into the Arctic region. They're just not built for it anymore. The Chinese now have more ships than the United States. They're not as good, but more importantly, the Chinese now have these very sophisticated supersonic missiles that can take out ships 1,000 miles from the shore of China, which basically gives them control over the west of the Pacific. The United States is building nuclear submarines and next-generation nuclear submarines, but as everything that the Pentagon does, it's slow, it's inefficient, it's super expensive, and it takes forever. In the U.S. is deployed some aircraft carriers, a new class of aircraft carriers, again, over budget, too slow in terms of production. It's going to take a while for them to get into the field, and they're not yet equipped with the latest technology of lasers and again, hypersonic missiles. Hopefully they will be equipped with those very quickly here or very shortly. But we need more. I think all of our quality of life and standard of living depends on a strong U.S. Navy that protects the shipping lanes, that protects trade. We need a domestic policy that protects trade as well. But we need a foreign policy. We need to reorient our foreign policy from being the policeman of the world, from being the protector of Europe. Europe doesn't need our protection. Russia is a source of trouble, but Europe can take care of Russia. But Europe needs to understand that the United States is not going to protect it forever. Nuclear umbrella, but no conventional forces in Europe. Ultimately, I mean, you can't do that all at once, but long term. America needs to focus on where I think it could add the most value to America. And that is protecting the shipping lanes and making sure that terrorists do not strike us. And that can be done in a variety of ways, which I've talked about in other lectures. Anyway, it's an Atlantic piece, The Age of American Naval Dominance. I mean, he has all kinds of recommendations that are anti-trade. He wants a lot of subsidies. He wants a lot of industrial policy. But I think his diagnosis of the problem, I just posted the link to the chat, his diagnosis of the problem is interesting and worth reading, even if I thoroughly disagree with his conclusions. But it is something to really be wary of and to be alert to, particularly, China's seeking dominance in the Western Pacific. And the United States and all of us as individuals, the United States, us as individuals cannot afford to let China have that dominance. All right, this one will be quick. Uber. So if you remember, California passed a law saying that Uber employees and Lyft employees had to be treated as employees, not as contractors. That law was then challenged by a voter kind of referendum. I think it was called 22. So it was called Proposition 22. It went to a vote, and Proposition 22 basically said, overruled the law that Sacramento passed, and basically said absolutely Uber and Lyft drivers can be contractors. That is then challenged in court. A lower court ruled that Proposition 22 was unconstitutional, and therefore drivers should be treated as employees. Well, yesterday, a First District Court of Appeals in California overturned the lower court and reinstated Proposition 22. So this seesaw back and forth continues. This might be appealed again to the California Supreme Court. But the fundamental question is, should the companies and the drivers have the ability to negotiate freely about whether they are employees or contractors and what are the terms of their employment or contract should be, or whether the state should impose a structure on these companies and on these drivers? So far, freedom, a little bit of freedom, is winning out. Even as contractors, there are lots of regulations that restrict the relationship between drivers and their employers. But at least a little bit of freedom seems to be working out, even in the state of California. Remember, it was California that voted to have Proposition 22, that is to make it possible for drivers to be contractors. So California sometimes votes in ways that are surprising given our stereotype of what California is really like. All right, let's jump in to some of the questions. Let me just say, I'm going to return many times, I think, to both of the big themes that we discussed today. That is the economy, banking, inflation, all of that. It's just going to be a constant theme, partially because it's part of what I do. These are things that interest me. These are things that I find important and interesting. And I think you should too. The things that our free market perspective is important to consider in this context. And then, of course, this naval dominance, this whole idea of the rise of China, the whole idea of the decline of the U.S. as a force globally, or the force globally, is important, and we're going to keep coming back to it with foreign policy implications, military implications, and all of that. And again, an area that I find interesting and stimulating. All right, Shahzad says, could Midas Mulligan pull off his perfect bank closing stunt in today's world with all depositors paid off down to the last penny? I mean, yes, you can do that if you have a 100% reserve bank, which I can't remember, but Midas Mulligan's bank might have been. That is, all the checking accounts are covered by reserves, either gold or cash or whatever. You probably, in such a context, you would have to pay the bank to actually have your deposits. You wouldn't get interest on the deposits. And then the bank would make money on, first of all, on the fees that they would take for accepting your deposits, and then on longer term deposits, on saving accounts, CDs, where the money was more locked in for a period, and then they would try to find loans for that money that matched the length of your deposit, and that way that would all be balanced off. So theoretically, Midas Mulligan could pull it off. It is definitely doable. It wouldn't have been the most profitable bank in the environment in the United States today, but because of the incentives regulations provide, the more risk a bank takes. That is, the fewer deposits it has, the less liquidity, in a sense, it has, the more profitable it is, and the government backstops it. So it would have been Midas's bank would have been very unprofitable relative to other banks, but it could certainly exist. Daniel says, GPT-4 has been just released. I saw that, and looks incredible. I saw that too. I think going forward, it will be important for someone to build some AI around the fundamentals of objectivist epistemology. Curious to hear your thoughts. Yeah, I mean, I know that there's at least one project that I've been told about that involves that. I do think that that it would be interesting to integrate objectivist epistemology into the algorithms, the quote learning that the machine does, that the algorithm does, and I think that would be a real breakthrough. A breakthrough in terms of machine, in terms of AI. GPT-4 does look really interesting, and it just shows that we're going to see exponential improvements here. And people made fun of GPT, the GPT that came out a few months ago, but that's silly, right? It's silly to make fun of it when you know that it's version 1. We all know in technology what version 2, version 3, version 4, the level of improvements, the kind of acceleration that happens. Is there a Moore's law equivalent in AI? Potentially, there's a lot of exciting things going on in computers. One of the interesting things I just read today, I was going to talk about this but ran out of time, is that somebody is hooking up brain cells to a computer and letting the brain cells do some of the calculations. And that's super interesting. And they're talking about now biological computers. There's already in place a chemical computer that is faster than a quantum computer. And now we're talking about biological computers. This is where you might get consciousness, is once you start using real live cells to do, to do the computation, then you're really starting to touch on creating consciousness. I don't know, right? So all interesting stuff. Amazing how technology continues to improve in spite of the world seemingly going to hell. Good, and this is the Silicon Valley. Everybody wants to denounce, crush, eliminate, put down, because I don't know. There were some members on the board on the board who are trans or gay or whatever, right? But let's crush Silicon Valley because we don't like the social the choices that these people are making. Astounding. All right, Zach, $50. Thank you, Zach. And I did see somebody else did $50 with that. Wes, thank you, Wes. Really appreciate it. We're only $6 away from our goal, so thank you, guys. Zach says, is Leonard Peikoff going to finish his fiction book? I've been waiting patiently since he announced he was writing it on his final podcast. Thanks, big fan of the show. Really appreciate it, Zach. Thanks for the $50. No, unfortunately, I'm going to have to disappoint you. And Leonard Peikoff is not continuing to write the fiction book. He gave up on that project a while back. It's been a couple of years. Last year he did a talk on operetta. He will be doing another talk, I think, in October. I don't want to say what it's about because I don't know if it's public yet. He is working on another book, but a lighthearted one. I think he takes it seriously, but not a fiction book that I also don't want to reveal because the people involved have not made it public, Leonard being one of them. So I'm going to wait until they make it public to talk about it. But the fiction book, he didn't finish, and then he was writing short stories, and he wrote some good short stories, but he was going to put out a book of short stories. But he's going to be 90. So what's amazing about Leonard Peikoff? I mean, this is as just as a human being. Put aside Leonard Peikoff is amazing as a philosopher, right? What's amazing about Leonard Peikoff is that he always stays productive. No matter how bad his health is, no matter how old he's getting, no matter what is going on in his life, he always finds a way to stay productive, and productive in creative, interesting ways. That is, he's not doing the same thing over and over again. And he never takes it as a hobby. He goes all in. And he's all in on fiction writing. He's all in on short stories. He's all in on these other projects he's doing. He was all in on operetta. And no, full energy into it in spite of his age. And that is truly, I think, amazing to see somebody be able to sustain a focus like he can at his age. So that is truly amazing. But no fiction book, unfortunately. Okay, Grant says, you mentioned the other day that big four banks had to insure all of their deposits by regulations. I would be very interested in where I can find this, as I can share it with my peers. They don't have to insure it all. It is basically insured. That is, the four biggest banks are considered too big to fail banks by law. The Federal Reserve is not allowed, or the FDIC is not allowed to let them fail. They pay higher premiums for deposit insurance as a consequence, but they are fully covered. A big bank, the four biggest banks. Now, I don't believe it's the four biggest banks. We just saw with SVB. It's, I think, probably the 20 biggest banks. Certainly the 10 biggest banks are not allowed to fail. If PNC, a big East Coast bank with branches in many, many states, and I can't remember the size of it, how many billions in assets, if it was teetering on the brink, would anybody let it fail? Of course they wouldn't let it fail. So, I mean, again, it's not about economics. None of this is economics. And this is why I find everybody online saying, oh, moral hazard, economic risk. Of course. But bank failures and bank regulations are never about economics. It's all about politics. So, of course, they wouldn't let Silicon Valley Bank, the depositors, suffer losses. Of course, they're not going to let PNC or Truist or any of these other non-too-big-to-fail banks suffer any losses. Because it's politics. It's not about economics. And it's why the Fed has basically a mandate to do whatever the hell it wants to secure stability in the economy, or whatever the hell they want to define it as. I mean, it's complete authoritarianism in that sense. The government can do whatever it wants. There's no rule of law. There's no rules. Oh, 250,000, can't do over that. There is no rules. That's my point. All right, I have 18 minutes left for questions. So please, if you're going to ask a question, make it a $20 question. Otherwise, hold off on the questions until tonight, because I'm limited in time today, less limited tonight. Hiram asks, what you're telling Yaron about naval production sounds a lot like the mistake made by the Barbarosa Eastern Front Nazis in World War II. I believe my hypothetical planned response is the opposite of such. ץכפלר. I guess I don't know what that is, but yes, I mean, it's somewhat opening an Eastern Front, but more importantly, I think the focus of the United States military, its focus on being the policeman of the world, being a democracy to whatever, getting bogged down in military operations and godforsaken places around the world, all of that, I mean, the trillions of dollars wasted. Wasted on our economy, wasted in terms of our quality of life and standard of living, wasted on the federal deficits, wasted on the fact that we didn't build up a Navy and other capabilities, hypersonic missiles and things like that, and let us fall behind in certain areas to the Chinese. There's a real cost. And I'm coming to the conclusion, after reading Ship War and after reading more about the state of the world and the rise of China and just supply chains and the importance of trade, that the most important function of the U.S. military, beyond, again, protecting our borders and protecting us from terrorists, is, and maybe more important than the terrorism, is to protect the shipping lanes, is to protect global trade. And we need a Navy for that, and we need a robust Navy, and we need a big Navy, and that's where military spending should be focused on. All right, Ian says, talking about politics, news from Semafor this morning is that the big four banks weren't allowed to participate in the first auction for SVB. I'm not surprised, and I told you this at the time. I said the big four banks each have about 10% of the deposits in the U.S. The Biden administration doesn't want them to be bigger. By law, they're not allowed to have more than 10% of the deposit base in the U.S. SVB would take them over that 10%. They would have to get special exclusion from that law from the feds. And the Biden administration is anti-big banks. It hates big banks. And the last thing they want to do is make big banks bigger. But what this crisis is actually showing us is that we need more big banks. We need 20 big, monstrous banks in the United States. That's the solution. We need them geographically diversified across sectors. What we don't need is 5,000 banks, which is what we have today. And what we need is massive consolidation in the banking system. We've needed that for 200 years. We still need it. Consolidation has happened. We've gone from 20,000 banks to 5,000 banks. We should have 500 banks with 20 to 50 massive ones and a bunch of credit unions and small banks. That's it. But instead, the Biden administration is not allowing the big banks to grow even bigger. I hope that as a consequence of the fact that these were the natural absorbers, Chase would have been natural to take over SVB. It has the footprint. It would give them an anchor in Silicon Valley. It would be good for Chase. It would be good for depositors. It would be good for everybody. But the Biden administration, their whole mentality of the FTC, all the regulatory agencies under Biden is no, we don't like big. We don't like big. And again, it's not like Republicans don't support that. Okay, Mark says, how will the growing federal debt and deficit contribute to inflation? They contribute. John Cochrane has the physical theory of inflation, which is interesting, and he would say that federal debt, growing federal debt, and a conviction by the market that the government cannot pay that debt back and won't pay that debt back is a real source of inflation. Frank says, didn't get a chance to tell Peter S. that I voted for the Libertarian Gary Johnson for president in 2016. For me, it was a valid choice. What do you think? I thought Gary Johnson was weak. I thought he was a missed opportunity. He's basically a good guy who decided to run a weak campaign without being controversial and without being radical. And he missed an incredible opportunity. 2016 should have been the year of the Libertarian candidate. It should have been the year where that candidate got gazillion votes, much more than ever before. Gary Johnson could have been that guy. He had the right views. He's not a wacky libertarian, and he missed the boat because he was afraid, or whatever reason, decided to be mellow and be not as radical as he should have been. Michael asks, is crypto the first step in separating state from money the same way Uber is the first step in separating state from taxi cabs? That's what people in crypto would like you to believe, but believe me, one of the big differences, there are many differences, but one of the big differences is the state doesn't care that much about taxes. The state cares a lot about money. The state giving up money? No way. They will shut you down. They will hunt you down. They will do everything that they can to shut down crypto and Bitcoin or whatever to avoid crypto replacing their money, right? So this is not taxi cabs. This is the tool that they have to control us, and they're not going to give it up. Bree says, the Fed said they would buy bonds from banks at face value instead of market value. Is this QE5? It looks like it is. No, because it's not like they're going to buy it in massive quantities. They're going to buy it to provide liquidity for the banks. They could have, of course, turned around and sell it in the market. And indeed, the Fed is right now in the process, and this is part of the problem that exists out there, in the process of selling bonds in the market, sucking money out of the economy. This is why interest rates were going up before all of this happened. So exactly how much it does, does it offset it by selling the bonds in the marketplace afterwards and taking the loss itself, is unclear exactly what the Fed will do and how big of a program this is. That will determine, but no, I don't think it's on the scale of a QE5. Do you know what kind of cities tend to do better during recessions? No, but my guess is cities which have a diversified employment base. That is, it's not all focused on one industry or one big company, but that has a lot of different sources of income and employment. But I don't know what that would be. Michael says, when Biden loses in 2024, will markets turn around? Do you foresee any deregulation occurring over the next decade? I mean, we could see some, depending on who the Republicans choose and who beats Biden. If Biden indeed loses, I'm not convinced he will. It looks like Republicans are going to nominate Trump, who could actually lose to Biden. Will deregulation happen? Some, not in an important way, not on a grand scale, not in a big way. I think markets will recover for a while, but I don't think that recovery is ultimately sustainable, because I don't think the Republican will do the things to sustain our economy over the long run. I mean, Biden has been a disaster from an economic perspective, but I don't know that anybody else would have been a lot better. Somewhat better, but not a lot better. Enric says, do bank runs affect only cash liquid deposits, not investments like CDs, stocks, mutual funds, and such? Well, they do affect those to the extent that those are not FDIC insured. They could affect those if the bank goes bust. That is, if the bank can't fulfill the liquidity requirements, or if the bank liquidates a lot of its assets in order to cover depositors, and it liquidates them at a loss and then doesn't have enough money to cover all these others, then a bank run does affect them and can affect them. Are you familiar with Custodia, Avanti Bank in Wyoming, and Catlin Long? They're going to be 108% reserved, but they're being denied membership from the Federal Reserve. Yeah, I mean, again, the Fed has no interest in seeing alternative banks and alternative solutions and alternative methodologies come about, because that would put into question the existing system, and they don't want that. I'm not familiar with those particular examples, no. I'll look them up. Hiram says, sometimes life imitates art and art imitates life. That's how magic happens, Yaron. Not sure what that relates to, but yes, we'll certainly have that. Gather 10 objectivists and speak in government about all these issues. What does that mean? How do you speak in government? Who's going to listen? How do you speak in government? You have to be invited. It doesn't work that way. Jacob says, do you have a cutoff for supporting Ukraine, financing their defenses? Ukraine has a horrible mobilization like Russia, grabbing young men off the streets, not allowing men to leave the country, violating rights. Yeah, so does Israel. So does the United States when war happens. Countries all over the world violate people's rights by having a mandatory military service when they think, quote, it's needed. So does Japan, so does Korea, and all of that would get a lot worse if anybody invaded them. There's mandatory military service all over Europe, in lots of countries in Europe. So I'm not justifying it. It's horrible. But again, Ukraine is a country moving towards the West. Ukraine is a country moving towards freedom. Russia is a corrupt, authoritarian country with global ambitions. Ukraine has no global ambitions. With global ambitions, if you let Ukraine fall, Russia goes after NATO. Russia will test NATO in Estonia. It will test NATO. It will certainly take Georgia next, and then it will test NATO in Estonia. I don't think the United States should allow that to happen. How much? I'm sure there's a limit, and I'm sure there are better ways to be supporting Ukraine. But I don't think it's going to take that much. I don't think Russia is going to be able to sustain what it's doing, and I don't think what we're spending on Ukraine is that much money. But I would like to see the Europeans doing a lot more of it. Ultimately, I'd like to see the Europeans funding the military effort in Ukraine much, much more than they are, and much, much more than the United States. They should be leading on this, not following the U.S. on this. But in terms of who one, should one, support the Ukrainians versus the Russians, it's a no contest. Of course, Ukrainian government is violating rights. So is the American government on a daily basis. That is no reason to think that Russia is the equal of the United States in terms of rights violation or in terms of legitimacy. And it's no reason to think that Russia is the equal of Ukraine. Russia is a threat to the U.S., it's a threat to peace. It's a threat, it's a threat. And while I don't think it's the kind of threat that requires the U.S. to go into direct combat with the Russians, I think it's a threat that we should, at a relatively cheap price, and I think this is relatively cheaply, deal with and let the Ukrainians deal with it. And we're getting it done on the cheap. I like whatever. Got a lot of VODs to catch up on. Thank you for all you do. Really appreciate it. Enjoy the videos. The American philosopher says, did the Fed do the right thing by insuring depositors of SVB? Why or why not? Are they trade-offs, and what do they make of the VCs whining for it? Again, I don't have time to cover that. I've got less than 5 minutes. I encourage you to listen to my previous shows where I cover this in depth. There is no right thing to do in situations like this. There is no right thing to do because we do not live in a situation of, when it comes to banking, of rule of law and standards and a free market. In a free market, of course, banks shouldn't be bailed out. We don't live in a free market. So there is no right answer to this. What do I think about the VC whining? Well, of course they whine. Why wouldn't they whine? Anybody would whine, right? If the banks in Michigan was going to go under, the auto industry would whine. If a bank that was banking farmers, it was a big bank that was banking farmers, farmers would whine. If it was a big bank banking, I don't know, something in New York, they would whine. Or conservatives, they would whine. People would whine no matter what. If it's going to affect them, they're going to whine. Particularly when they realize, and we've got a long history of this, that none of this is being determined by economics. All of this is political. Whining gets people's attention. Whining is what moves political needles. So you whine. You whine in order to influence politics. The mixed economy is an economy in which pressure groups are fighting over limited resources. And those pressure groups are different industry groups, they're different political groups, they're different cultural groups. And they're all fighting over a limited set of resources, and they're eating each other apart. And when a bank is at risk, everybody's going to attack it, and everybody's going to try to get as many benefits to themselves as possible. This is the nature of a mixed economy. This is why we should get rid of the mixed economy. This is why this is another opportunity among many opportunities to advocate for a free market, not to get into massive debates about the bailout of this bank or that bank. It's irrelevant. It doesn't matter. It's a screwed up system at the core. And unless you treat the core, nothing else matters. And you're complaining about, but the rules are never, nobody ever abides by the rules. Unless it's a little bank in the middle of nowhere where nobody cares about and nobody pays attention, and then the rules are followed. But almost never are the rules followed in a big bank, right? I'm sure people whine when Continental Illinois, the largest bankruptcy in U.S. history to that point, in 1984, failed in Chicago, in Midtown Chicago, and it was bailed out by the Reagan administration. It was bailed out. Declared too big to fail. First bank ever to be declared too big to fail was Continental Illinois. Okay, this is the world in which we live. This is the economy in which we live, and this is and we function based on that knowledge. I have to run. Today I'm doing a show dedicated to Israel. All your questions, everything you want to know about Israel, I'm afraid to ask. 7 p.m. East Coast time, right here. I'll take questions about anything, including follow-ups and these. So feel free to join us, 7 p.m. East Coast time, Yaron Book Show, right here. Bye, everybody.